Okay, MegaWhale team, welcome back to the channel, guys. Thanks for tuning in today's video. We're going to be taking a look at Bitcoin today and talking about the price action, discussing the macro, more importantly, doing a full technical analysis of Bitcoin, talking about where the price is going, where we think it's heading on the short term and the larger term, and what to look out for. There's a few dangerous things coming up on the chart that has caught my attention in the last few days that I do want to discuss just to prepare everyone for worst case scenario. Now, before we get into it, guys, head down to the pinned comment, click the link, join our Telegram channel, and get access to all our updates, analysis, and much more. You can see it over here. You also get access to our VIP channel if you would like. You can see 20 trades, 17 wins, 3 losses, heaps of profits over here. Contact me over here to get more information. And of course, our standard channel, analysis, posts, updates, videos, heaps of more relevant and informative content for you guys there if you want it. So let's go ahead and talk about it. And there's a few things I want to talk about today. First and foremost, I've actually gone ahead and removed a lot of trend lines off this chart. I'm going to draw it up for you guys again today in real time to show you guys what I'm thinking and see if we can actually find any more new, relevant, and important information as we go. I also want to talk about our macro chart over here, the 9-year trend line. I want to talk about the short-term price action, what we think is happening on the short term, and I want to quickly talk about something very dangerous that I'm seeing on the total cryptocurrency market cap, which is very relevant and something that we should not turn a blind eye to. So before we get started, guys, let's just go ahead, click that link, join up our Telegram channel, really beneficial, and then we'll go ahead and get into it. So total cryptocurrency market cap, we have something called a bearish pennant formation. Now, a bearish pennant formation is when we have two downtrending, or should I say one downtrending line, one uptrending line, and the price converges between these trend lines. That is what a pennant is. Now, a pennant in itself, as we can see over here, is not a bearish pattern. It's a neutral pattern, meaning that there's an equal probability that we break to the top side as we do to the downside. Now, the pattern measured move we take from the entry point to the first initial retest of that trend line, of that lower trend line. And that is our measure move. We apply to the breakout point to tell us where we're going to go. So we're going to take that and just put it over here for a second, because we want to talk about that in just a moment. But what we're seeing over here is what we call a bearish pennant. And a bearish pennant is when the price action enters from the top side in. And generally we see our price action continue through the pattern and to the downside. If we see the price action enter from the bottom side in and continue, we generally see it enter the top side. Now, it isn't a massive greater degree of probability that occurs. It is quite a slim advantage it has towards that bias. If we do have the price entering downside, there's a slight advantage that it does continue that way, but it is not guaranteed. It is a neutral pattern after all. But it's something to keep in mind, guys. If we do lose this uptrending trend line, we will confirm that this pennant has broken, and we do expect the price to move down. Now, where will the price go down to? Well, here's the thing. The measured move will suggest, let's say it breaks around here, around 40 billion, okay? Now, if it goes to $40 billion, Bitcoin will go down to 12 to 13,000, okay? That range lines up with that total cryptocurrency market cap. We can see over here, if we go back to the total cryptocurrency market cap, you can see it lines up, okay? So we will go down to about $12 to $13,000 if we go down to a 400 million market cap. Now, here is the thing about measured moves. Measured moves do not tell you the exact price you're going to. They tell you the direction. Generally, the price will move within that direction until it finds a strong enough support to either then create a new market pattern or rebound and invalidate that downward move or upward move. Okay, so what we're looking at here is if we do break out of this pennant, we will expect a retest of this low on the total cryptocurrency market cap. Now, of course, if we retest the low on the total cryptocurrency market cap, we're very likely to retest the low on Bitcoin. Okay, that's 17,600 low, very likely. Now, that is when the new question is posed. Do we lose this level or do we bounce from here? And I guess that's a question we can answer today, but of course, it's all speculation. Now, obviously, there's a very high degree of chance that we do bounce from the level. We have to assume support is support until it's not. And there are triggers that would cause that price level to lose. Like I said, if 1 basis point comes, that level is as good as dust, in my opinion. If 1 basis point comes, that level is basically over, in my opinion. I think that support will fail. Until then, support is support until it's not. And we're going to show you a bunch of stuff today on the charts, more specifically when we do our technical analysis, that is indicating the bottom is in and has been in for a very long time, and we will continue upwards. This is just a matter of volatility. And I say this a lot, and I've said this in last cycles, guys. I've said it down over here in last cycles, and even over here. we don't generally touch the bottom and just moon upwards. You don't generally just hit the bottom and then continue upwards. You have a slow, drawn out period of sideways price action that tricks people into thinking the bottom's not in, or we're going higher, or we're going lower, or we're going to go much lower, whatever, and then it slowly bleeds upwards. So we're seeing something or some sorts of that potentially, where we have this sideways price action. But in that being said, there are things occurring this cycle, or particularly this bottom, that hasn't occurred before, and we'll talk about those in a second as well. But let's talk about the short-term price action while we're at it, and then we'll get into that macro and all that kind of stuff, because at the end of the day, the short-term price action will result in the larger time frames starting to move. So short-term is very, very relevant. So what we're looking at here is a quick, I say, display of all the important things on the chart right now in terms of structures and zones. We have our major local resistances, which is this zone over here between 20,600, 20,800. We have a major trigger level, which is, as you see, a bullish rejection point, which is 20,800. Okay, we have a local bottom, which is 18,700, and we have the absolute bottom, which is 17,600, and this short-term weak pennant uptrending support. This pennant comes from our previous pennant formation here, which we broke down from. We've just extended our support line across to provide support at the moment. And of course, we have our trigger point for a move upwards, which is 24,500, a very important trigger point that will send the market significantly higher if we do break that level. Okay, so we'll talk about where we think the price will be going in a second. Let's just discuss the short term. So we've got a few options over here. Right now, we are very much neutral. This is neutral territory, in my opinion. Between this uptrending support line and this massive resistance, I would not be overly bearish. I would not be overly bullish. This is short-term price action. This is a range that we do not want to be taking many positions on. Take a few positions on coins that look good, ready at support or ready to reject, but I wouldn't be overextending myself here. If we do lose this trend line, like we lost over here, we can expect the price to retrace back to this local low. This will be 18,700, 18,800 level. If the price is able to clear this level here, we do expect a push back upwards to this level. This is 21,800. As you can see, this level has acted as a very strong resistance in the past. Obviously, breaking through that resistance, we will move higher. Now, in instance of here, the reason we didn't go much higher is because we used this as a rejection point. If you take our trend line across, this was in fact a rejection on the uptrending support line of our previous market structure, which was the ascending channel. That is now invalidated. This rejection is invalidated. It will not occur again. If we head upwards, we will more or less likely continue upwards if we move through this level up to this next point. Okay, so looking for those ranges. If we break through this level, retest the support, that would be your entry point. If we lose this level, retest it as resistance, that would be your short point. Obviously, reassessing the short term at this point. So what happens, guys, if we are able to push upwards and break through this level up over here? Well, let's take a look at this chart. If we're able to push upwards and break through that local high, and we'll go ahead and draw it in, 24,500, the next target realistically will be this next major resistance zone, which is sitting between 28,000 to 30,000. Of course, this is a very strong area of resistance on the chart, and we've talked about that a lot. That is basically our trigger point to shift out of the bear market. If we break that level, we're shifting out of the bear market and into a new trend. So we go ahead and draw our trend lines down. We can see that we've got a lot of resistance at that point. Slightly above that level. That is our first trend line. If we go ahead and draw a trend line from our RSI high, which is this point here, you can see it is still meeting at that level. So to push into this range here, we would in turn flip this macro downtrend, and we would be developing a new trend, a short-term or mid-term uptrend, potentially developing in a longer-term uptrend from that point. Okay, let's take a look. If we lose this local low, if we lose the absolute bottom, the next realistic target is this level over here, which is $12,000 to $13,000, represented by these major areas of resistance on the chart. Simple as that. We keep it nice and simple. There's nothing else to discuss when it comes to that. Keep it nice and simple. The short term right now of it is we've talked about, the macro we've talked about the total cryptocurrency market cap. Let's go ahead and do a quick technical analysis on the macro chart and talk about what is telling us the bottom's in, what is telling us the bottom is not in. So what I want to do actually is I want to go over to this chart here. So there's a few technical indicators that suggest the bottom's in. I'm going to go ahead and bring it up. First one is obviously the pi cycle low. Now the pi cycle low has been very accurate at predicting not only the tops, but also the bottoms for Bitcoin in the entire cycle. So losing this level here, going below this local low again now, would not only invalidate a 9-year trend, but it would invalidate an indicator that has been almost, well, I would say 100% accurate the entire time. Now, it is stupid to assume any indicator is 100% accurate. At some point, this indicator will be incorrect and print a false buy signal. That is something we do have to be aware of, and that is why I don't take any singular indicator at face value. It is very important to assess it, realize there's limitations of it, understand the potential faults in the indicator, and then just use it based on what you think, or apply it to your current analysis. So right now, the pi cycle indicator is suggesting the bottom's in, and of course, this will flip if we lose this bottom trend line. So very important to keep in mind right now, that is one indicator. Another indicator was the hash ribbons. This one was also printing a buy signal. As you can see, it did print a buy signal over here. Now, this has never, well, this is printed, I think, over the last 14 signals, it's been wrong 3 times. So someone did the math for me, I think that's about a 75% win rate or something. About 75-80% of the time, this indicator has been quite accurate at predicting not particular bottoms of macro cycles, but just bottoms in general. Generally, the price will move upwards after these buy signals are printed, and it's done it again, so that's something to keep in mind. And again, there are limitations of this indicator, as it did actually print a buy signal back at $27,000, and then it got removed. So as the price moves down, these indicators do cancel out their orders and cancel out their data points. So it's very interesting and important to keep in mind as well, but that's another indicator that is suggesting that. Another indicator that we can take a look at is the moving averages. Now, specifically the 300 moving average. I've talked about how moving averages are not support levels, but moving averages, again, are something to keep in mind, because we did retest the 300 moving average on the 18th of March. We've come very, very close to it and yet to lose that 300. What we're seeing now is very interesting, because the 300 moving average is now actually pushing above our local or absolute bottom. So the 300 moving average is now officially above our absolute bottom, providing even more potential support at that level. Now, losing the 300 moving average and losing the bottom would be absolutely catastrophic for the Bitcoin price, show a lot of weakness, and we're more or less likely to head down even lower. So that is what's going on the macro here. These are some indicators I've been looking at, something to keep in mind on the larger time frame. If we go ahead and take a look at some other indicators, such as momentum, the RSI, we can see a few things. And obviously we do have on our 3-day chart, our macro descending wedge. We can draw it out on a weekly as well. Our macro descending wedge over here, obviously ignoring this fake out over here. This was a false high for Bitcoin. The actual top was over here. And we can go ahead and draw our lower trend line in. As we can see, similar to a lot of altcoins over here, we have a macro falling wedge pattern. And falling wedge patterns are bullish patterns. Of course, we have trigger points. So watching this as this level over here, this particular level on the weekly RSI, the 32.60, is going to be the trigger for the next move. The reason I say this is the trigger for the next move, if we take a look at the 32.30 in the past with Bitcoin right now, we can see every single time we've lost the 32.60 on that weekly chart, which is 2 instances in the last little bit, we've seen a significant crash in the price. Just in the last few months, we saw a drawdown of 25%, followed by a drawdown of 45% by losing this level. We bounced from that level of support. We bounced upwards, not strong enough to break out of that downward sloping resistance, strong enough to give us a nice little bounce, but nothing significant. If we lose this level again, that would be the trigger for me that I do believe the bottom is not in, has been invalidated, and we go lower. So I'm really keeping an eye on that level. So that will be the trigger for me, even if we do not lose this level. If we lose this level first, I do believe this level will be lost. So keep an eye on that, guys. I think I'm going to wrap up the video today. I think that's all I want to talk about. If you've got any questions, leave them down below. Let me know what you think about the RSI. I personally think the RSI is amazing. And I will see you guys tomorrow in the next video. Cheers. Okay, guys, we're going to be taking a quick look at Bitget. And now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below. Bitget is probably the best exchange out there if you're a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, could name a bunch more, KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.